Hello, it's Adil bringing you intermarket analysis perspective on the European markets end of day wrap, basically for the Tuesday, the 17th of March 2015. Okay, right, end of day market wrap up. So let's see what's happening here. Basically, the European indices finished weak. The actual FTSE finished strong, and that was primarily due to the Asian markets higher overnight, China, Shanghai predominantly, and obviously the Nikkei as well. Now the question every trader should ask, and I've already wrote this on Twitter just now, the question every trader should be asking right now is as to why the European indices failed and why the UK 100 actually rallied. So why the divergence? That's basically the question everybody should be asking at this juncture. Okay, the answer to that question basically means the actual FOMC, Miss Yellen, Fed. Okay, so they've obviously started their meeting today. They release the announcement tomorrow. You'll certainly be getting inside information or leaks or front running or started already with regards to the markets. And basically, we can see that everybody is anticipating a less than hawkish Yellen, which means, generally speaking, is the dollar index is going to fall. If you look at the dollar index at this very moment in time, it's a 10-minute chart. Look at a 60-minute chart. So basically, you do have a potential argument here for a HNS formation, given the fact that we've broken out of the actual channel there. Okay, so rising, contracting wedge, we've broken out of there. You've obviously put in your head, and we're putting in a right shoulder, and obviously looking for a potential move lower on a less than hawkish Miss Yellen. If that's the case, then that generally means that the euro is going to appreciate, the Kiwi will appreciate, the Aussie will appreciate, the sterling will appreciate, everything will appreciate versus the dollar. So if the dollar falls, it obviously helps commodities. Okay, now as we all know, if that's the case, whether or not she removes patience and obviously substitutes that for another word that means patience, so basically it's a matter of taking out the thesaurus and finding out another word for patience. Okay, because at this very juncture, especially with the housing stats today, the week data yesterday, and also the week data on Friday with regards to inflation, overall all the numbers are certainly not confirming a rate rise. If anything, it's to the contrary. Okay, so given the economic data in the last 2 days alone, that usually calls for a rate cut as opposed to a rate rise. So it's all about obviously preserving her credibility and maintaining the status quo, I think, from my perspective, and which will be obviously her talking. Well, either way, whatever she comes out with, or whatever her strategy is, her strategy, basically the conclusion of that will be to talk down the dollar. Okay, regardless how she's going to do that is going to be very interesting. Okay, the strategy that she certainly employs, whether she reduces or actually cuts her inflation forecast, which a lot of individuals and respected analysts have been stating. Again, it's all basically up in the air. Nothing really, no confirmation on either side or commitment. So at this juncture, basically, we can see that the dollar index already has an HNS formation. The daily chart, as you can see, is quite exhausted. Okay, we do have an inside bar consolidation at present. Either way, the market can go is 50-50 at this juncture with regards to Miss Yellen. Okay, emerging markets obviously have been hurt, and we also have commodities obviously getting hurt as well. I mean, the gold price at the moment is gyrating. Copper obviously has fallen, and you can see the oil price is languishing at the $43 level. So this deflationary pulse, they certainly need to combat, and the one way of obviously trying not to combat it basically is to raise rates. That's the last thing you want to be doing right now. So she has no other choice, from my perspective, to sound dovish. But whether or not the market falls for that, now the FTSE, like I said, it's a different animal, given the fact that the FTSE is coming from a different perspective, and that perspective, like I explained, is predominantly to do with the actual weakness in the dollar. Okay, so a weakness in the dollar is obviously helping or propelling the FTSE, and also you had higher a wage. Basically, the minimum wage has been increased, or is being proposed to be increased, so that obviously helps real incomes or real wages. which in turn leads to higher disposable income. Okay, so a higher propensity to consume, so that generally is good for the FTSE 100. Okay, so we did have Sainsbury's news that was negative today, so that certainly was impacting the FTSE. But overall, that's basically where we stand, okay, with regards to the market from that perspective. Okay, so you have bullish FTSE versus a bearish European or EU indices, which is quite interesting, this conundrum at this very moment in time. The S&P obviously will catch a bid, and the Dow, etc., have obviously caught a bid on that dollar, but the uncertainty regarding the markets will certainly potentially cause a sell-off in the US markets as well. Obviously, European markets may well take the global markets down with them. We'll see. Again, it's been a real conundrum trying to work out this divergence of where the US and US and UK have been weak, and the European indices have been rallying to new highs. So we may well see the opposite now. But again, it's debatable, okay, because Europe really has has been the fuel, should I say, for the rally, and if that fuel is no longer obviously present, then we certainly do have a conundrum. So it's all about how the divergences are understood and interpreted, especially with regards to the Chinese markets moving to new highs and the Nikkei obviously pushing higher as well. Okay, so let's have a look at the technical picture now. Now, one more factor I do need to make you aware of is the actual economic data that did come out today. With regards to the German perspective, the economic data was relatively weak because the expectations index actually dropped, and that was blamed mainly on the sentiment, or the dire sentiment, or the negative impact from the Russia-Ukraine crisis. Okay, the CPI data did come out slightly better than expected, so obviously that negates the arguments of further QE going down the road, so hence the reason why Europe was obviously hit as well. We did have the GDT, or the dairy index, price index, obviously coming lower than expected, so again commodities under pressure from that perspective as well. Okay, and obviously, like I stated, you had the German data out in the morning as well. We had the employment data come out stronger as well out of the Eurozone, which was very interesting. Again, that supports the Euro on the upside, and that certainly will help the Euro propel higher, which in turn, like I discussed already, is one of the main factors that's caused the European equities to move higher. So if the Euro starts to go higher, or moves in the opposite direction, before previously it was going lower, it was helping exports, now it's going higher, it will have the opposite impact on exports. So that certainly needs to be taken into consideration as well. Okay, the housing stats were very weak out of the US. Okay, so again, that's something certainly to take into consideration. Okay, so overall, like I said, the economic data was negative, and that certainly should weigh on US indices, and the uncertainty regarding Ms. Yellen should certainly weigh on the indices as well. But the most important factor here is that European indices were weak today, and that could certainly be a drag on the US indices and UK indices as well. The FTSE has factored in the majority of the bullish news now. One could argue at this very juncture it's currently trading at the 6850 region, so one could argue that it certainly has factored the bullish news in. As you can see here, potential double top scenario here around the 6845, and especially with oil still languishing at the lows at $43, there certainly isn't a catalyst at this very moment to propel that higher. And like I said, European indices certainly have been weak throughout the day regardless. Okay, so that's certainly something to take as a warning sign, and that obviously will drag on US indices as well. So let's just see where the actual US or European indices are at this very current juncture, and where exactly they're headed. Okay, so start with the German DAX. Okay, German DAX at the moment on a daily chart, one could argue the inside bar, obviously it's inside bar consolidation, so one certainly needs to pay respect and homage to that. But like I stated earlier, the whole affair of Europe today, yes, we know we had weaker expectations out of the German economy, but going forward, obviously ZEW current situation was higher, but economic sentiment was higher as well, but came in lower than, well, higher than previous one, came in lower than expectations. And obviously the sentiment generally is the one that's the most important, and obviously the expectation survey was relatively weak as well. So the German DAX obviously has this unfilled gap at 11,900. Now I did state earlier that's very unlikely to get closed given the fact that the Asian markets were higher overnight, and obviously the QE or Draghi put is still there, and obviously that was the case. We went as low as 11,930, and then we bounced. Okay, so that certainly needs to be taken into consideration too. So it's a real conundrum right now from a intermarket analysis perspective. That's all I will say. Every day as it comes. Okay, you have broken out this key diagonal trend line support, so that's certainly something that needs to be taken into consideration. And obviously you've got the magnet dragging the unfilled gap below, magnet dragging this market lower. You've got this symmetrical wedge pattern, so it certainly needs to be respected in the 10-minute chart as well. The HNS obviously has completed, and we have had a potential squeeze back higher, back up and above the 12,000 level, and this again will be very, very interesting going forward. Okay, so let's see how this market transpires and let's see how this plays out. Okay, so this is basically where we stand on the 10-minute chart for the German DAX, and remember the unfilled gap below is at 11,900. And we have a second level of support around the 11,850, and we'll see exactly how that transpires. Let's observe the CAC now. Let's see what the CAC is showing us at this very moment in time. Okay, so French CAC, daily chart of the French CAC. Okay, again just an inside bar, nothing really concerning on a daily chart, overtly concerning anyway. So a daily chart at this very moment in time. Let's just have a look at this. Okay, so daily chart, 60-minute chart at the moment certainly does start to give you a worrying sign, given the fact that yes, we've had higher highs and higher lows, but it certainly does indicate some type of weakness, especially with the higher volume on the sell-off. Let's go to the 10-minute chart. Okay, 10-minute chart. Yes, the markets have sold off. We've come into gap fill. So again, it's going to be whether or not we can consolidate here, and obviously start to make lower lows and lower highs. That's going to be important too. Okay, if the market is really going to start reversing in the opposite direction. So again, this level of this barrier of support has held at the 5010 level, and let's see whether or not this market goes back higher to the 5070 level, or it starts to reverse and start making new lows. This is going to be very interesting as to what's going to happen in the next 24 hours, and it all hinges on the Euro USD. Okay, the European indices, Euro stocks. Okay, so again, technically at the moment, yes, we have bounced. I've just closed my long Euro USD for plus 15 from the from a 30.65 region, and sitting back and observing for now. Okay, 10-minute chart. 10-minute chart, as you can see here, we are in this symmetrical wedge type pattern. It'll be interesting to see which way we break, given the fact that the euro will be dictating. Okay, so if the market does fall, we do have support around the 3630 region. If not, then we go back and retest the double top high at 3715. Again, the market will dictate and tell us exactly where it wants to go. Okay, now we do have another indices here that we can observe, if I can find it, that is. Okay, the FTSE 250, again this is quite important, given the fact that we've broken out this rising diagonal trend line, and this is a lower high. That certainly needs to be respected as well. Okay, certainly needs to be respected from a technical perspective. Also, with regards to the FTSE 350, you can clearly see that we have this HNS formation. Obviously, this fake out here, breakout, fake out, and this is your right shoulder, and you're into the fib 50 to 61% resistance. So you're looking for a right shoulder, and obviously the markets to collapse and move lower. So again, that's interesting as well. Okay, especially given the fact that oil prices are languishing at $43, and even with the sell-off in the dollar earlier on today, that failed to propel the markets higher. So this again, and also given the fact that the euro has tried to move higher at the 1.06 level, and still yet the dollar fails to reignite or really move higher. So again, a cause for concern. Okay, again, cause for concern from my perspective. Okay, so FTSE 250, 350 certainly looking weak. The FTSE 100, again, certainly looking weak, given the fact that it has a bear flag formation. The FTSE 100, that's your volatility index, looks like a bull flag. And looking at the daily chart of the FTSE 100, given the fact that we're into a horizontal resistance, okay, so you've got this bear flag formation on the FTSE 100 and looking for a potential move lower, given the fact that we're consolidating within that red candle. The only time I'll switch my bias there is obviously if the FTSE breaks out the red candle, starts to push higher, then we're back at the 6950 region again, okay, with regards to the FTSE 100 going forward. Okay, so that's basically where we stand from the technical picture that that I can observe at this very moment in time, and it's all about the double top resistance at 6850 region with regards to the FTSE, and again with regards to the German DAX. If I just go back to the German DAX again and give you an insight on that again, because it's a dictator. Okay, again the unfilled gap below, so certainly isn't looking from the European perspective at this very moment in time. It's a conundrum again, and also with regards to the FTSE itself, it certainly remains a conundrum, because on the one hand you have Euro USD going higher, dollar going lower, and that should in theory help the actual US indices against the European indices, but then you have a weaker dollar, which in turn should help the FTSE, given the fact that it has the commodity relationship. So you can play it both ways at this very moment in time, so you have to be selective. So a weaker dollar generally will favour the UK or the FTSE 100 and the US markets, and obviously a weaker dollar certainly isn't in the favour of European indices, so therefore they will stall. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.